If you are a real estate investor that owns multiple rental properties or a business owner that operates multiple businesses, you already know that one lawsuit can jeopardize everything if you don't have the right structure in place. Have you ever heard of a Series LLC? This is the one tax structure that can help protect your assets, keep you organized, and simplify your tax life. And today I'm going to break it all down for you. My name is Keisha Rondino. I am a real estate and business CPA and tax strategist. I teach you how to pay less in taxes by using the tax code to implement strategies that is going to help you save on taxes and build wealth. So let's talk about the Series LLC. A Series LLC is like an umbrella company. It's one LLC, but it has the ability to have several cells or series underneath it. And each series can have its own assets, its own liabilities, and even have its own members within those activities. So think about it like this. You have one holding company at the top, and then underneath it, you have several other businesses or several other properties that is included in it. And the good thing about this is that each series has its own level of protection. So if someone sues one property or one business, the other properties and other businesses are protected under that Series LLC. So let's talk about how the Series LLC protects your assets. Let's say you are a real estate investor with 4 rental properties and you put all 4 of those rental properties in the same LLC. If something goes wrong with one property and you're sued, then all of the properties within that LLC may be open to risk because they are under the same LLC. But the Series LLC, each property has its own level of protection. So if property A gets sued, the plaintiff will have no rights to properties B, C, or D. Each series has their own safety box, even though they're under the same LLC umbrella. It gives you the protection without having a headache of setting up multiple LLCs. One important thing to know about Series LLCs is that it is not recognized in all states. So you have to ensure that the state that you are looking to set your Series LLC up in is recognized by that state. So I know at the time of that I'm doing this video, a couple of states that do recognize it is Texas, Illinois, Nevada, and I believe Delaware. So if those are states that you have property in or you have businesses in and you want to set up a Series LLC, it is definitely worth exploring in those states, and hopefully maybe over time other states will jump on board with recognizing these Series LLC. So when you are ready to set it up and you're setting up in a state that does recognize it, one of the first things you want to do is file the articles of formation with the state, and you're going to indicate that it is a Series LLC. Next, you're going to create an operating agreement, and within this operating agreement, you are going to specifically specify that you are able to create series under this LLC. Each series should have their rules and regulations and all their information outlined and documented in that operating agreement that pertains to that series. And then you want to create each series as you grow. Each of those states may not require you to file a different series, but they do want you to document each series that is within that LLC. So let me give you a real life example of how creating a Series LLC could be beneficial for you if you have multiple properties. I have a client, let's just call it Tasha, just for privacy reasons. She owned 5 rental properties. She owns 3 long-term rentals and 2 short-term rentals. Before working with me, she had each of these properties just in her name. They were not even under a regular LLC. And so as we started to work together, I advised her that she could use a Series LLC to put all of her properties in. It would give her asset protection. So what we did is for Series A that owns a duplex in Houston, for Series B that holds her Airbnb in Galveston, for Series C that holds her long-term rental in Dallas, and Series D is where she's going to be used for flipping properties, rehabbing properties that she purchased and then flip them for profits. Each of these series has their own bank account, they have their own accounting records, and they have their own operating agreements and lease agreements within them. So for her property that's in Galveston, there was an issue to where on the steps of her, if you know anything about Galveston and a lot of the properties that they have out there, is that they're built on kind of higher. And so usually it takes steps to get through the front door to actually get inside of the property. Well, there was a situation where one of the steps, it started to break some. And so there was a guest that came for the weekend. As she was walking up the stairs, she had a pair of heels on. The heel got stuck in the wood, like sometimes there's just a break in the wood, but her foot got stuck in it. Her foot went through the wood part of the stairs and she was injured. She did need to get stitches and she was okay at the end of the day, but she did need to get stitches. And so from there, it could have been a lot worse, but her property was protected. If that guest had decided that she was going to sue because her foot went through and she had to get stitches, then she would only be suing Series B, which is what that Galveston property is in. We did not have a lawsuit. It did not have to go that far, but I say that to say that she was protected in the event that there was a lawsuit, because these things happen. We don't realize it, but they do happen. We never know when we are going to need that asset protection. And that leads me into the maintenance of a Series LLC. I always tell everyone that you may not need asset protection until you actually need it. And if you really want the asset protection to hold up when you need it to be, let's say if you do end up in court, then you have to show that you are maintaining it appropriately. You have to make sure that you are operating each series independently of each other. That is the way to show that this is a series that they're completely independent of each other, because you are operating it independently of each other. And when we say treat each of the series as their own company, this is what I mean. First, you want to have separate bank accounts for each. You want to have separate accounting and bookkeeping for each. You want to document ownership for each of the series. And you want to make sure any signed contracts or leases that you have are within each individual series. If you mix everything together and you get sloppy with it, then a judge is going to rule that the Series LLC is not a true Series LLC. And that asset protection that you believe that you had is going to be gone. This is where having a good CPA and having a good bookkeeping system is going to be beneficial for you. Since the IRS does not recognize the Series LLC entity as a single entity, each series is responsible for reporting to the IRS all activities that took place throughout the year. So that means that if you are a sole owner, if the series is a sole owner, then it's considered a disregarded entity and may be reported on your individual tax filing. If you have multiple members of a series, then it may be considered a partnership and you may have to file a partnership tax filing. If you've elected each series to be an S corporation, then each of those series are going to have to file its own S corp tax filing. That's why it's important to meet with your CPA, because depending on the structure of how you set up each series, that is going to determine how the information is going to be reported to the IRS. And an accounting tip that you might find to be helpful is when you are using an accounting system to track your businesses or your rental properties in a series, you can use either classes or projects within your accounting system in order to help you keep track of the activity within each series. Usually when you set up a project or you set up a class, you can run reports, you can pull in information specific to each of those categories. And so finding out which accounting system is going to be best for you for tracking a series is going to be helpful. So the question is a Series LLC right for you? So if you have multiple rental properties that you do operate, or you operate multiple business, it may be a good choice for you. It could be the best thing for you, and it can absolutely be a smart move. But here's the thing, setting it up is one thing and maintaining it is another. If you truly want to be able to recognize the Series LLC and asset protection that comes with it, you must make sure that you are separating everything out by series, that you have separate bank accounts, that you are keeping leases separate, that you have accounting and bookkeeping in place individually for it. That is the only way that it's going to hold up in court, as each series being separate from each other. So if you are thinking about setting up a Series LLC, or you already have a Series LLC and think you may not be using it correctly, use the link in our bio to schedule a call with us. We would love to talk with you and guide you through to make sure that you are doing this correctly. We want you to have the tax benefits that comes with operating a Series LLC, as well have the asset protection that comes with operating that Series LLC. So I hope this video has been helpful for you. Make sure you like and you subscribe. And if you have any questions below, make sure to leave them because I would love to hear from you. I look forward to seeing you in the next video. Bye.